Hi everybody, how's it going? It's Tuesday, the 2nd of December, and the countdown to Christmas now. Just thought I would do some quick video analysis of the Euro Yen. I'm sure maybe some of you will have seen me trying to short these pairs at various points over the last few weeks, and as usual, the market is taking its time to roll over, if it rolls over at all. First thing I just want to remind you, any of you who are trading on the higher time frames, such as the weekly or even the daily, just remember that it does take time for these markets to turn around. There's a lot of money that is flowing. These are big sums of money that it takes to turn these markets around at these levels, and so it takes time for it to actually materialize. Just as I was looking at this, I saw this example here. Back last year, so you saw this very strong uptrend here. We saw then a long wick here, and then a two candle reversal here. And as you can see, it took the guts of 5 or 6 weeks for that reversal to actually materialize. And so if you're trading on the weekly chart, just bear in mind it moves slowly. And even the daily chart can take a while for the market to turn around. It rarely just turns around straight on a dime and storms off in the opposite direction. A reversal is a process. So with that said, I just want to draw your attention quickly to this rally here. So as usual, preceding trend. If you're new to this and you're not quite sure what I'm speaking about, there's an ebook that I have on this method of trading that's available at www.forexuseful.com. So as you can see here, we've got this strong trend. The past candle indicator here has picked out this long wick, and as you can see, this is pretty textbook. It's lovely. It's a little small body, not too long of a wick to the downside, and then this big huge long wick. So the bulls opened up after this candle and then just marched off to the upside, as has been routine in the 3 weeks previous. But at some point towards the end of that week, the bears said, here, hang on a second, and they pushed price back down, leaving this long wick. Now the question you have to ask yourself is that, put yourself in the bull's shoes here. At the open of this last week's candle, would you be thinking to yourself, this is a great place to buy? Well, obviously some did, because the price did push up, but I'm not quite convinced that the bears are out of the game just yet. So, what I would suggest is that, in the real world, look, if you were looking at this setup in a candlestick textbook, this candle wouldn't have happened. We would have just got a big storm back to the downside again. But unfortunately, this is the real world, and so we have to just trade what the market gives us. I am recognizing this candle as the bulls, fighting back a little bit, but at the same time, they haven't got over the highs of this candle yet, and I'm just keeping an eye on what they're going to do over the course of the next few days. The other thing I just wanted to point out is that when you have a candle like this, when you do have a bullish candle afterwards, providing it doesn't break out to the upside here, we are at very, very favorable risk reward levels here. If we got a trade to the downside here, somewhere around these levels, and price actually did move down even 2-3 weeks, look at our risk, even if it's this sort of amount. Wouldn't take too long to get to the downside before you start getting into seriously attractive risk reward ratios. So don't write these off. Yeah, take this candle into account by all means, but I don't think the battle is over just yet. Let's just jump in here to the daily, and I'll just put this back. That's it now. So as you can see here, it's been a fairly strong move to the upside. Failed long wick here. Um, this indicator is not by any means infallible, the same as all other technical indicators. As you can see here, we had a valid long wick candle, but the bears just didn't manage to grasp the nettle and roll price over. And this candle here was the one where, excuse me, if we had have seen that, that's the signal to just step aside and stop trying to short. If you're trying to short after you've seen a candle like that, you know, you're in for some serious pain. You have to listen to the market when you see a candle like that, and that's telling you to get out of the way. But as you can see here, we've come further on up here. The strong trend has continued. We've seen this long wick here, followed by this strong move to the downside here. So, you know, again, textbook would be that this would have just rolled over to the downside, but instead we've just seen this sort of drift sideways slightly to the upside. And is price going to move down here, or is it going to continue? Well, we'll have to wait and see. What I am, the way I'm going to plan to play this is I'm going to say, as you can see, this high of this strong candle here to the downside hasn't been taken out. So I'm saying that the bulls haven't managed really to regain strong control of the market after this strong bear candle. So my hope is, my thesis is that this is the bulls running out of steam and it's going to roll over to the downside. That's what I hope will happen, and that is the way I'm going to position myself for this trade towards the end of, you know, moving through to the end of this week. Today's Tuesday, so, you know, between Wednesday and Friday. So down to the 4-hour chart here, let's see if we can get a trend line again. There's no particular, oh, look at that straight away. That's how you know how long I've been doing these. It's almost like my trend line was magnetic there or something. Yeah, that's as good as any. Some people might come up with different ones, you know. But look, there's no right or wrong necessarily. This is just a reference point. It's you know, if you join up as many lows here as you can, but you know, if you came up with something different, is, you know, it should be fairly obvious. You know, a decent trend line when you see one. If you're trying to force it and it's not obvious, it's probably not a good trend line. You want one that everyone else sees as well. So the way I'd be playing this is that we're actually quite close to it now, although we are at 10:05 here, so we're moving out of the US session into the Asian session. I'll be keeping an eye on this. Well, obviously I'll be going to bed soon, but when I get up tomorrow morning, see what sort of happens here. If we get a break, I'll be on the keep an eye out for a retest and then a fall away. If price particularly takes out these highs, I'll have to listen to that and say, right, that's probably the bears waving the white flag. And definitely, if the bulls got above this level, I would definitely be stepping aside. So these are the boundaries in which I'll be playing. Price has to make up its mind at some point. It's either going to move up, in which point I'll be, you know, playing defensive and keeping my losses as small as possible. And in the event of a break to the downside, I'll get as aggressive as I can and try to maximize any profit opportunity that comes my way. I'll try and record the screen again as this plays out. Hopefully, you know, ideally I'll get up tomorrow morning and price will be about here, and then that would make for a cracking entry if it did break. But, you know, market rarely gives us exactly what we want. But let's see what happens tomorrow, and if I can record it, I will. Thanks very much for watching, and I hope to see you tomorrow.